Hello traders and welcome to another video review. Today is Thursday, November 28, 2024. Let's find out what's going on the economic calendar today. During the Asian session, we got the release of the ANZ business confidence data from the New Zealand. Then we got the private new capital expenditure data that beats the expectations of 0.9% with the actual number of 1.1%, which is even better than minus 2.2% last month. So in Australia, new capital expenditure is increasing. Spanish CPI and HICP is scheduled for release at 9 o'clock. Polish GDP is scheduled for release at 10 o'clock. Then we have the German CPI data scheduled for release at 2 o'clock, and this is the key event of the day. ECB Elderson will give a speech at 2 o'clock as well, and 30 minutes later, current account from the Canada will be released. And that's about the situation in the event calendar. We are closing the day with the ECB lane speech at 6 p.m. So that's about it. Let's take a look at the charts. Euro dollar 4-hour chart completed the wave C to the upside as expected. However, the market didn't actually touch the level of 1.0596 with the actual high at 0.588. So it looks like the wave C of the corrective cycle has been completed. And now the market, as you can see, is moving slowly down. The momentum is still positive, not that strong because it's only on 53 points. However, it's still positive. Nevertheless, any violation of this exact level, which is apparently here, as you can see, let me just make it right. Okay, so this one is not important. This level here, any violation of this level here, so the wave A high 1.0511 might be first indication of the resume of the downtrend. We got, of course, this short-term trendline support, but this trendline support might have been just tested, or it's about to be tested. It depends on how we do this trend line. So we got a breakout here. Now it's not important. Now we got this trend line here, first, second. This is the first, and this is the second situation with the trend line. Okay, let's leave it like that. ABC to the upside, technical support. Then of course we got another technical supports here. Obviously it will be the low of the wave B, and then the beginning of the wave A, 1.0334. So ABC to the upside is completed. However, please notice the fact that this correction might evolve into more complex pattern. So please don't be that much focus on the simple correction, ABC simple correction. We might see some sort of the more complex and time-consuming correction here. Nevertheless, the outlook remains bearish as long as the market trades below 1.0595, 1.0611. So that was the euro dollar. Let's find out what is going on the cable. The cable exactly remakes the movement of the euro dollar. The same situation, ABC to the upside. If you can't see it, let me just place it on the chart. So we got something like ABC, B, and 1, 2, 3, 4, 5 to the upside. Something like this. So ABC to the upside looks completed again on the cable, and it's the same situation here. This one, this line, it will not be necessary anymore because market doesn't actually respect this line. We might do the zone here. So if we grab the line, we can do it on the wave 4 high. And right now we got, of course, the technical support that is about to be completed and tested, 1.2612. So we are going here to of course test this level, and the other level is as it was with the wave with the euro dollar, 1.2523, the low of the wave B, or even here. So it all depends how we are going to measure it. Nevertheless, the point is that the market is right now moving quite lower. This is still very interesting pin bar here below the 100 periods moving average, so we should see some downside movements very soon. Gold market is again looking quite nicely. We bounced from the 61% Fibonacci retracement, moved towards the 100 periods moving average, made a local technical level here. Let me just double this line. There you go. Copy this line. 2657. So we are now close in between these ranges here. Fibonacci is no longer necessary because we retraced 61%, so we can even place a mark arrow here that indicates that this is the key technical support right now, because it's 61% Fibonacci retracement. Momentum is still quite low, 46 points only, so it's a negative territory. And now we are waiting for a breakout. It looks like this movement to the upside is purely impulsive, and that was only A, B, C zigzag correction to the downside. So if we consider this as some sort of the first wave to the upside, this then would be the wave 2, and that would 3, 4, 5. So that would mean that we are going to continue this movement here, this impulsive cycle. However, we might see some more complex and time-consuming correction here on the gold market. So please don't get too much focus on the upside only. The upside is confirmed only when we break above 2,720 on gold. And last but not least, let's take a look at the Bitcoin. Obviously, just yesterday we got this rally on the Bitcoin from the 100 periods moving average. We went up to the 97,250 level. So this level now, let me just copy this line so I can place it here. This level here is intraday technical resistance. Very nice doji candlestick pattern here. Some sort of the very small pin bar here, and then confirmation to the downside, because the market is above the level of 50. Rather was above the level of 50, and now is apparently testing the level of 50 points, again neutral level. So we need a breakout to the upside. We need another strong push to the upside in order to see Bitcoin rising again. All right, so this actually doesn't look very impulsive here. So how we can label this recent situation: from the all-time high, we got the wave A, we got the wave B, and we got the wave C. Or we might have the wave A, B, and C. So that's the wave A, W, connector X, A, B, and C, and we got the complex correction, double zigzag here, which is also possible. However, let's stick to the ABC corrective pattern. This is very nice movement to the upside. However, if we place a Fibonacci retracement to the upside, so we got this recent swing to the downside, you can see that we retrace 61% already. So this movement to the upside was way stronger than the typical retracement, even if we measure the last swing. Okay, even if we measure the last swing here, let me just adjust it. It doesn't actually matter that much, because that's even worse for the measurements and our analysis, because it's definitely broken. 61% is definitely broken. Maybe there was something about 78%, which is quite unusual, but it still can happen. Nevertheless, we retraced a lot. Of the wave C, and now the market must consolidate and reverse higher again in order to continue the rally towards $100,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.